Hello and welcome to the Trade of the Week. This past week we had a few bellwether European stocks reporting. Of particular interest to me were Diageo, the world's biggest drink company, and Heineken, and they need no introduction. First off was Heineken reporting on Wednesday morning. My thinking was I'd read Heineken's report, see if I can gather some nuggets of information that I could use to trade Diageo's results the next day. So I waited for Heineken's results, and they were actually cracking out on Wednesday morning. Analysts expected revenue to rise 8%. It was actually up 11%. Profit was meant to rise to 425 million. It went up to 489 million. You know, pretty damn good. And their share price responded with a 9% jump, finished the day up around 7.3%. Now, as far as Diageo goes, their share price also jumped, both in the drinks industry, quite correlated, only about 3% though. Traded around about 4% up for the whole day. This is they were mostly being held back because analysts were fearing that Diageo's results wouldn't be as good as Heineken's. They were thinking that the weakening sales trend, which Diageo had warned about about 3 months ago, would continue. They weren't expecting much from Diageo. Now my thinking was though that I'd go long Diageo thinking that the market gurus didn't have it correct, and on the back of Heineken's stunning performance, that Diageo's results must have been pretty good too. The drink industry mustn't have been in too bad of a state. So I actually went long just before Diageo closed for trading on Wednesday evening, right about here. So I went long there. Now, this is a risky, high risk trade because what you're actually looking for is a gap in the share price. Now, when it reopens the next morning at 8 a.m., and it did, but we'll come to that, and it didn't gap my way. So my thought process as far as stops and limits goes was I didn't really need them. I was getting out of this trade as soon as the market opens, hope preferably after gapping upwards. So Diageo's results were released on Thursday morning at around about 7 a.m., which gives traders about an hour to analyze the results before the market opens at 8 a.m. They were pretty terrible. Nothing really like Heineken's at all. They they were pretty negative on 2010, saying that it would challenging. They missed analyst expectations. All in all, pretty poor. The market did gap, and as a result, it gapped down here, as you can see, about 4%. Disaster for my long trade, and I got out. I just got out. My reasoning, my logic behind my trade was gone, so I got out at about 10 past 8, taking a big loss. Um, Tail between my legs, got out, took my loss, moved on. Um, and well, the lesson is it was a bad trade in the end, and the outcome was bad. But there's a further thing. You should take your loss once your reason behind getting into the trade is gone, dead and buried. Take your loss and move on. As we can see here, the share price continued to move down later on in the day. As see there's the arrow sloping downwards. There's no need for you to be in a long position there, hoping that Diageo share price recovers. Just take your loss, move on. Don't put yourself through further emotional strain and financial loss. So, there's my trade of the week. Not a good trade this week, but there's a lesson to be learned in all trades. And the lesson is cut your losses, protect your bankroll, and get out. Thanks for listening.